Greetings everyone, JJ here from SchoolofTrade.com with your term and quiz of the day. Here's how it works, real simple. We'll cover different topics every day here in our term of the day. At the end of this video, there's going to be a quiz. All you have to do, if you know the answer to the quiz, click the link right below the video that says I know the answer. That will take you to our blog. Post your answer on our blog. The first 5 correct answers every day are going to receive free beginners courses, up to 20% off advanced courses. Guys, that's an $800 value, guys, so make sure you answer quickly, and remember, you got to be correct. If you want any information about the rules about this, how to join the raffle, when the raffle is going to be, just simply contact sales@schooloftrade.com for more information. The rules are posted, though, right on the blog as well under the quizzes term. So go to the sitemap, then look for quizzes, and you'll see, of course, all the rules right there. Let's get started. Term of the day today is momentum, one of our most popular indicators, one of the things we love to use every day in a live trade room. Guys, it's used with all of our high percentage setups. So what is momentum? It's an indicator, a technical indicator used with all of our setups. It's the force or the strength of the market. It uses price and volume to calculate it. Now, I always tell people, think of momentum as you taking a baseball or a soccer ball or a rock, right, and tossing it in the air. Okay, so think of momentum as the force that you place on the mass of the baseball, right? So the baseball, right, the mass is X. The force that I use to throw the baseball is going to be Y. So, of course, it's a calculation of the force times the mass, right? That's momentum. Now, how we apply this to trading? Price and volume. Okay, the force would be how quickly the price is coming, and the mass would be the volume, right? The price, what they're trading. So if we're looking at lots of buyers at 81.50, momentum will point up, right? Because price is rising, speed is increasing, and more trades are piling on, right? So force times mass, right? I won't get into too much technicalities with you guys. This isn't science class here, but momentum is very simple. It relies on a simple indicator on our charts. It's referred to an oscillator, right? It's referred to as an oscillator. An oscillator meaning, right, round, right, oscillator. So it's called an oscillator, and different oscillators, right, inside of momentum might be RSIs, stochastics. There are a lot of different oscillators. We use momentum specifically on a faster time frame. Okay, so we're not going to watch it on a very slow time frame because we're taking much shorter term trades here. So we use momentum, good rule of thumb, use momentum on the same chart you take your trades on. So if I take my trades on a 1-minute chart, I'm going to use 1-minute momentum. If I take my trades on a 10-minute chart, I'm going to use, you get it, 10-minute momentum. All right. Now, another way to use momentum would be to add a slower time frame momentum to make sure you're trading with the slower time frame. So for example, I have a 10-minute chart with momentum and a 1-minute chart with momentum as well. I make sure the 10-minute chart has momentum pointing down, and that also want momentum pointing down on my 1-minute chart. When both of those are pointing down, that's an extra filter for me to enter short. So you can use slower time frames, but we'll focus on the faster time frames most importantly. And it's a final check before we enter a trade. It's essential for all types of traders, and it's actually really simple to understand, but can be more difficult to actually put into play in the market. Point it up for longs and pointing down for shorts. Right? Sounds really easy. Momentum curls and points down, we want to go short. Momentum curls up from the bottom, we want to go long. Very easy to understand, but now we'll take a look at why it can be more difficult to kind of execute with confidence with momentum. Now, keep in mind, every single one of our trade patterns uses momentum. We use momentum, as you can see, for the entries, right, in the blue, for the entries, and then in the red here for the exits. So no matter whether you're getting into a trade or getting out of a trade on a breaker, on a wave, or a 2-step pattern, you will be using momentum every single step of the way. Here's what momentum should look like. For a long trade, I want it curled up from the bottom. Beware for a long trade of overbought momentum. In fact, today in the room, we saw a couple examples where we almost got into some bad trades, but we were too quick, right? We looked at that momentum indicator because the momentum indicator was already overbought, which means it can curl and point back over, which means a long trade is more dangerous in overbought territory. Now for a short trade, I want to see that momentum indicator curl over from the top. Now beware for a short trade, oversold territory, and then look for divergence. Divergence is a sentiment tool, not to be confused with a trade pattern. Okay, divergence is a sentiment tool. Now, divergence means diverging from the mean, right? One going in one direction, the other going the other direction. Now, when price is rising and momentum is falling, that would be one reason, right, to see divergence. Okay, so if you have a short pattern setting up and the momentum indicator is rising, pointing up, that's divergence, which means this is probably going to reverse. Again, be careful about taking trades in overbought or oversold territory. And that's what I mean by it can be a little more difficult sometimes to execute this stuff because that overbought, oversold territory in days like this morning where we saw, for the most part, a very slow, sluggish environment, you're going to see a lot of trade patterns that look perfect except for that last second before you pull the trigger. Momentum gets pulled all the way down to oversold or all the way up to overbought, and all of a sudden it becomes a riskier trade. So watch out for that momentum indicator getting sucked up into overbought for a long trade or getting sucked down into oversold for a short trade. What that tells you is if momentum gets sucked up to the overbought territory, that means that the buyers are trying everything they possibly can throw at this market to get that price to rise. Overbought means they're now beginning to run out of steam, right? They're going to begin to start slowing down. They're losing ammunition, which means if it's overbought, the buyers are losing strength. It's going to curl back over very soon. And of course, at that point, we should be looking for a short trade. So be careful when you're looking at it. Make sure it's that last check and balance before you go pull that trigger. Here's a great example of it. If you look here now in the lower left-hand corner here, the lower left-hand corner, you'll see the momentum indicator. I'm sorry, excuse me, lower right-hand corner. Apparently, I'm looking backwards today. Lower right-hand corner, right? My other left, right? The right-hand side. Momentum indicator at the bottom. Now notice how momentum was all the way pulled below oversold. Okay, so momentum is here below the oversold level here of 20. And follow me up top here now. We're looking for a short trade. Now this is a two-step pattern, right? A reversal pattern. So we mark up our swing low here, right? We break below that swing low for a two-step pattern short. As long as momentum is confirming. Now follow me back down. Momentum for a short trade should be what? Curling over from the top. This one is curled up from the bottom. And as you can see, what happened is that actually the trade ended up working out for 2 or 3 ticks and then reversing back to the upside if you follow me back to the upside here. Right? So trade does work out a couple ticks, but then quickly, though, momentum proves to be a factor here and reverses right back to the upside again. One more thing. Keep an eye on this. Pace of tape. If you see slow pace of tape here, red, slow, choppy price action, combine that with overbought or oversold momentum, you have yourself a recipe for disaster. Okay, so when you see slow red pace of a tape, momentum overbought or oversold against your trade position, be careful out there. Wait for a better pattern. All right, guys, lots of information this time. Quiz time. Quiz time. I know. Eyes on your own screen. Eyes on your own screen. This should be an easy quiz for you. All right, guys, this is an oscillator. Right? That's what it's called. It's called an oscillator. It's used in a fast time frame, and we look for it to point up for a long trade. What do you think? Is it my time and sales window? Is it my pace of the tape indicator? Or is it my momentum indicator? This is an oscillator, guys. It's used in a fast time frame. We look for it to point up for a long trade, right? Curl up from the bottom and point up for a long trade. What is it called? Is it called pace of tape, time and sales, or the momentum indicator? Do you know the answer? If you know the answer, guys, make sure you guys are quick. First 5 are going to qualify for the free beginners courses, 20% discounts in the advanced course. And if you need any help with the raffle or the rules, just simply email us, sales@schooloftrade.com. Hope the quiz helped. Learning more about momentum today. We'll see you guys in the room tomorrow, 7:45 a.m. Bye-bye for now.